Good afternoon or good morning, depending on your relevant time zone in joining us today. Welcome to our first UK lettings and property management update. During the webinar, we're looking to provide an update surrounding UK lettings and property management market, and just also update you essentially what we're doing as a business to support you as our clients at Complete through the COVID-19 pandemic. I'd like to welcome our panelists of today, which will be on our next slide. Myself, Lee Ashley, Managing Director of Complete, Sam Tabor, Associate Director of London, and Nicola Smith, Associate Director of UK Regional Cities. What you'll look to take away from this webinar, essentially a view of what's happened this year, some detail specifically on what we as a business are doing in our relevant offices and markets, and sort of any questions at the end that we've sort of had through that we'll try and answer the queries you may have around what's going on in the marketplace. If we sort of start on our next slide, which is a look at 2020 so far. Following the result of 2019 general election, with the Conservative Party obviously gaining a large majority, the housing market began to gather quite a lot of momentum, with what we saw as increased applicant numbers across both the UK sales and lettings market in the first few weeks and months really of 2020, with a strong number of first-time buyers coming to the market, a lot of that being sort of Help to Buy being a big part of that. However, the UK lettings market and private landlords have definitely began to feel the pressure from the government with the implementation of various pieces of new legislation and changes in taxation, with things like electrical safety regulations, which essentially come in 2020 and effective of July the 1st. An extension of the Tenant Fee Act will be applicable as of June the 1st. These are just two new pieces of legislation. This have come into effect later this year. In addition to this, during the 2020 budget, the announcement on SDLT 2% increase for non-UK resident landlords, which will be effective of April 2021. And it's also indicated, which we should expect to see, the end of Section 21s with the consultation period due shortly. With all these changes looming, we're anticipating there may be fewer what we call an accidental landlord in the local market or coming to the market, which actually we think will be a progressive increase for foreign investment to the UK lettings market. And one of the big reasons around that is property in the UK is still very much a stable asset class, and looking at sort of history and cycles and 10-year cycles of property, which we always like to look back on as within the industry, you know, they've always performed consistently. The latest research and insights were indicating that mainstream rents are beginning to return to sort of positive territory, and the overall rental values were also returning to growth. And then obviously we got hit with coronavirus, which began spreading globally rapidly, as we all know, and leading the UK to a lockdown restriction in March, which essentially has been relaxed as of May the 13th, which we'll come on to. So what are the effects of COVID-19 on the lettings market? Well, we're still unsure what the effects really are in the UK lettings market or the UK economy as a whole, but the current expectations or forecasts have indicated we should expect a relatively short but very sharp V-shaped economic downturn and recovery. This economic downturn is inevitably, and regardless of the significant government support for jobs, such as furlough and job retention scheme and household and mortgage holiday payment relief. The prospects of significant fall in housing market activity and short-term pressures on prices and rents was expected whilst the lockdown restrictions were in place. However, we do believe that now the restrictions and property viewings have been relaxed, the UK housing market and lettings market will actually slowly start to recover, and actually potentially a little bit quicker than we might have hoped. The number of requests for temporary rent reductions on existing lets has also increased, And these are situations where a reduction has been requested. We're encouraging landlords to consider this for their tenants' circumstances, but we do have to evaluate each case in its own merit to make sure it's relevant. We're also anticipating the unlet stock levels will increase due to practical difficulties in moving, but again, this is set to change as the main lockdown restrictions are slightly more relaxed. So post-COVID 2020 lettings market, what do we think it's going to look like? COVID-19 has created a lot of uncertainty and disrupted the norm for everyone globally, and certainly none of us have seen anything like it before. The UK market is the most resilient market in my view, and this is the case after 2008 global financial crisis. We anticipate that lettings market post-COVID will include the following: short-term downward pressure on rents, an offsetting bounce in rents as needs-based return to the market and unlet stock levels reduces. Both elements will be determined on the length and severity of the lockdown restrictions and the impact on employment in key sectors. The bounce in housing and lettings market risks being curtailed by numerous external factors such as new stock coming onto the market and possibly Brexit still, which we've all forgotten about. Only if all the previously mentioned occurs successfully, a normal service, whatever that normal will potentially be, and resume, a slight change in annual rental growth may occur. I'm now going to pass you over to my colleagues Sam Tabor and Nicola, who head up our London UK divisions, who will respectively talk to you about what Complete are doing to support you, our clients, during this time.
Thank you, Lee, for that introduction. My name's Sam. I'm the Associate Director and oversee our London operation. The first slide I'd like to talk to you about is our marketing engagement and applicants and level of inquiries year on year. As you can see, we've had a significant uplift at the start of this year versus 2019. Things were really moving along very nicely with a record amount of applicants registered in that first month of this year, and February and March were no different, although that growth had tailed off a little bit in April. So we saw the lockdown implemented towards the end of March, which had an immediate impact on the amount of applicants that we were registering. But in terms of engagement levels, much higher this period than the same time last year, nearly a 30% year-on-year increase. The only slight month-on-month decrease, as I mentioned, was 6.9% between March and April when the lockdown was implemented. I think it comes as a bit of a shock to those particularly in London and had an impact on the amount of applicants that we had looking. But the numbers have started and have improved in April. Lots of applicants again starting to look, and May doesn't look too dissimilar. So we are very optimistic that once normality resumes here, that the number of inquiries we're receiving will continue in the same vein as they did at the start of this year. So as the restrictions relax, we expect to see a greater engagement, particularly over the summer period, which is historically one of the busiest times for us in terms of let numbers. So we've two graphs here. One shows the year-on-year renewal activity, and the other shows the let activity, again year on year between January and April. So we had another fantastic start to the year in terms of the volume of renewals that we were doing. Now that's in part because we've had some growth in London. We have more occupied units than we did this time last year, but actually a lot of it comes down to a bit of uncertainty surrounding what was happening at the time with the coronavirus, and we've seen a number of our tenants more often than not choosing to renew their tenancy and stay put, which is good for our clients. Of course, it means continuity of tenant. It means that often we can attract a greater rent, and actually our team have been particularly focused over the last few months in making sure that we keep the tenants that we've got where we can and where they remain financially viable, and also to try and get an increase for our clients where possible in line with the market rates. Our less activity was very good in the first quarter of 2020. 2019 was great, but we had a lot more lets at the start of this year, again, in part because we've seen a growth in the number of units that we let and manage in our London office, but also because of, as Lee referred to earlier, the bounce coming back into 2020 off the back of the general election, and we were seeing things start to move. We also had some nice new projects that we were working on over that period. And naturally, with the lockdown and the uncertainty that brought, we saw a drop significantly in the number of lets that we did as a result in April. What was nice to see was that we were still doing some activity, that we had tenants that were actively looking, and most of those tenants that we secured that moved in April were able to view the properties via video viewings rather than actually see the properties in person. So we were still very active in trying to attract tenants, particularly for our vacant units, and that success can be shown there, but of course not as many lets as we would have liked compared with the previous year. I'm now going to pass you over to my colleague Nicola in our Manchester office. Over to you, Nicola.
Hello everyone, I am Sam has just said, Nicola. I am an Associate Director and cover our UK regional cities. If we take a look at the two graphs here, which are the same as the ones Sam has just been through for his area. If we review the graph on the left-hand side, we can see each month our renewal figures across regional cities have been greater year on year. However, there's a significant difference in March 2020 as we focused on completing tenancy renewals during the peak time of uncertainty in the UK. For a number of reasons, tenants who were due to vacate at this time no longer could, and we worked to ensure that tenancies were renewed and executed, providing income for the landlords and security for the tenants at that time. If we take a look at the graph on the right-hand side, it is what we would expect, clearly indicates that the outbreak affected our let figures from March onward. The number of lets concluded in the first 2 weeks of March actually meant we were still in a better position year on year, but the impact is very visible for April. It must be highlighted that where people did need to move during this month, we were still able to safely provide this service for them and ensured that the move-ins went ahead. We'll run through Complete's current business operations and what we are doing at the moment to support our clients during this crisis. All of our teams are working remotely and providing the same service. We set up our staff pretty early in this, well, before lockdown even happened. We got our teams working from home, we got their IT in place, and we ensured that the IT support was there to help them throughout. Our office hours have remained the same. That is 9 AM to 6 PM UK time. And that ensures that the service we are providing continues without any disruption. We have, I'm very proud to say, managed to retain all of our property managers across all offices. That means that as a landlord or a tenant where you have one point of contact, that point of contact will remain. And as of the 1st of June, we will resume viewings on vacant properties. This is following the recent relaxation of the lockdown rules. We are currently conducting all of the necessary risk assessments and procuring the required PPE for our staff. Moving on, we will look at how we are approaching the new lets and relets on our portfolios. So to explain the difference, a new let is new to market vacant stock which has recently completed. We have been marketing this stock throughout the pandemic, and we have completed a number of successful lets. This has been achieved by a number of ways. We have obtained video tours of properties so that we can provide virtual viewings. We have floor plans which we share with applicants where necessary. And we also have been doing live streamed viewings. So a member of the team goes to the property, a specific property that may have been previously discussed with an applicant. They've checked the photographs, they've checked the floor plan. They will then go and conduct a viewing with them via WhatsApp or via Skype. As previously mentioned, as of the 1st of June, we will also begin to conduct face-to-face viewings on these vacant properties. We have looked to differentiate ourselves in the market and been able to provide certain other things. For example, with our Loom development in Manchester, we have worked with a third party and we've put together a development overview booklet. This provides information regarding local amenities and also advantages of the building and the communal areas. The move-in process itself has had to change for obvious reasons. Following changes in legislation, we have been able to conduct right-to-rent checks electronically. All of the inventories are completed prior to the move-in, if possible 72 hours, but 24 if necessary. A member of staff on the day of the move-in at an agreed appointment time will then visit the property with the keys, leave the keys inside, and then come out of the property and wait at a safe distance to ensure the tenant enters, collects the keys and accepts the property. So taking a look at our relet process. So a relet property is a currently tenanted property where a tenant has served notice and they are due to vacate in the future. In order to assist with the marketing and letting of these properties, we have looked to obtain a video tour of the property from the current tenant. Again, we have floor plans which we can share with applicants where necessary, and then move on to share photographs we might have from when we first took the property on and it was empty, so it shows it in a good light, but also the video that we've obtained from the tenant and any current photographs they've sent us. The move-in process on a relet property would be the same as previously run through on our new let properties. The tenant would have vacated by then, the property would have been professionally cleaned and ready for someone to move in, so the move-in process is much the same. The checkout process of a property that is currently tenanted has, again for obvious reasons, been changed. We're advising tenants where possible to leave the keys with the concierge or to leave the keys in the property. Again, a member of staff will have agreed previously a time to visit and then enter the property once the tenant's left, check all the keys are there, or if they're left with the concierge, we'll call them to verify this. The checkout is then conducted, or the inventory checkout is then conducted once the tenant has vacated. So I think going back to Sam, he's going to run through the marketing and some of the ways we have been ensuring that we're getting the information out to the applicants as best we can.
Thank you, Nicola. Yeah, one of the things that we are particularly proud of at Complete is our occupancy rates and our ability to find quality tenants at full market rents and in good time, reducing the void period between tenancies that our landlords might otherwise suffer. And we achieve this by our marketing, and credit to our marketing manager, Charlotte, who does an awful lot of the work in the background to achieve this, including putting together this webinar. We advertise on various portals, including Rightmove and Zoopla, where a majority of our applicant inquiries will come from. And from there, we're able to qualify them correctly and book viewings accordingly. We have operated successfully a refer a friend scheme where we have tenants already in a development where we have other vacant units. We find a lot of our tenants will be introduced to an area or location by other friends that have moved there, particularly where it's a brand new development. As we alluded to earlier, we do virtual and video tours at the moment of the properties where we can. Of course, we'll arrange those ourselves where the property is vacant, but we've actually had some of our existing tenants that are vacating be kind enough to provide us with a video tour that we've been able to share with our applicants. And this has helped us secure a number of tenancies, new tenancies recently. We also do a lot with social media campaigns, and for anyone that follows IP Global or Complete on the various media portals that we appear on, you'll see that we are often announcing new developments or promoting a particular apartment that might be to let, and depending on where our focus and need is. And this helps us to secure tenants, particularly where we do have a new large project where we've got many units available, and this helps us find tenants in good time. And then in terms of the website content, we will include information about the local area and guides. We offer featured development pages linked back to our website, which gives information about the project. And this improves our click-through rate, so the amount of inquiries that we're receiving on new projects. And as well as this, we will also work often with local agents to the development who can help introduce us to new tenants. And we cover the costs involved in doing so to make sure that we're giving any of the developments the maximum exposure that we possibly can. And it's testament that these processes work, and because of our success rates here in London and elsewhere in the UK in terms of occupying properties quickly and at the best possible rents and finding good quality tenants. And if we can move on to the next slide, please. And one of the other things that we have been heavily focused on during this pandemic period is our rent arrears. And we are proud of our teams and the effort that they've put into, and Nicola in a moment will go through some of the things that we've been doing to achieve these low numbers. Now, of course, we've seen an increase year on year in London, marginally in terms of our rent arrears, but still hugely lower than our competitors or national averages. But that's in part because we have had significant growth in the portfolio. Actually, January they were slightly higher, but compared year on year with February, they'd come down. And then, of course, the virus had become apparent in the UK and was starting to have an impact on industry and jobs. And we saw a spike come in March and April. But in reality, the rent arrears being where they are is much better than what we had actually forecast that we would see. And I think in part that's due to the efforts that our team have gone to make sure that they're having open and frank discussions with our tenants, identifying quickly where there might be a problem and consulting with our landlords correctly to make sure that we get an agreement for any rent arrears to be paid in arrears on a payment schedule quickly, and making sure that all parties were comfortable with that. So I'm very pleased with where we are, although of course we would rather not be in this situation. I'm going to pass you back to Nicola now. Over to you, Nick.
We'll take a look in a bit more detail our rent arrears process. Sam touched on briefly prior to handing over to me that the staff have really been working very hard where tenants are in a situation and have requested payment holidays to do everything that they can to ensure that plans are in place, but also that landlords are up to date and the best possible outcome is reached for everyone. Currently, we are chasing all of our outstanding rent arrears on a daily basis. Each property manager runs a report every day which highlights any tenancy where rent has become overdue. Previously, we would allow 2 to 3 days for payments to clear before initiating our rent arrears process. However, we've changed this so that now people are contacted from day one of the property falling into arrears. The tenants are called, they are texted, emailed, and then further down the line formally written to as part of our arrears chase process. Currently, 2.3% of our tenants in London and 5.4% of our tenants in our UK regional cities have requested rental payment holidays. This includes completion and submission of the hardship form you can see on the right hand side of your screen. Discussions will take place with both parties to negotiate an agreement that everyone is happy with, and continual monitoring of the legislation changes and ensuring our staff are up to date with these changes means that they can provide the best advice to our clients and also help tenants should they not have thought of avenues where they can reach income. Once a plan has been agreed that everyone is happy with, we have a formal payment plan template which is completed per property, and then it is electronically agreed by both parties. I know the rental arrears process has to be discussed because unfortunately this is something that we have to focus on as a result of this outbreak. But what I am pleased to say is that, as Sam highlighted, we are in a much better place than we thought we would be, and we are running at a much lower percentage of arrears against competitors and national averages at the time. So again, this is just down to the hard work of our staff, and they really are working as best as they can to ensure that this affects people as minimally as possible, both tenants and landlords. I think we're going to now move on to a panelist Q&A. So we have a fourth party member joining us, that's Anna Langford, and she's our operations director. If anyone has any questions they want to put to us, Lee, myself and Sam will still be here, and Anna joining us to answer any.
Hello, everyone. I'm Charlotte Warner, and I'm the Marketing and Communications Manager for Complete, and I will be chairing our Q&A session today with our panelists, Lee Ashley, Anna Langford, Sam Table, and Nicola Smith. Thank you all so much for submitting your questions across to us today. I think we've got time for 4 questions today. So the first one I'm going to go into is quite a few of you have been asking us today about our snagging and handover process. This is a question for Nicola. Do you have a process with the developer in relation to notices being served, keys collected, and the snagging and handover process being completed?
Thank you, Charlotte. We do. That's a very relevant question, actually. Completions at one of the Manchester developments, the Loom, actually began on March the 16th. So it was at the height of all of this in the UK, and it was an immediate focus for our office. We had to make sure that we could continue to provide the handover service for our clients, and the relationship that we had previously developed with the developer really helped in this. So we were able to quite quickly agree with them a new process. We agreed set dates that a member of Complete could visit the site alone, adhering to the safety guidelines and procedures at the time. They then had a member of their team who would, on that date, visit the site, open all of the units that had completed that we manage and had to check, and then they would leave them open for our staff member to enter. Upon entering, he would find all of the keys, all of the fobs. They had been cleaned and left in a sealed envelope, a sealed plastic bag for collection. He could then, on his own, safely work in the property to check for snags, complete the usual handover that we would do, take the keys from site, and then proceed in putting together the report for the client. He would then also pass feedback the snags to the developer, and then proceed in the same manner through all of the completions that we get notified of from IP. The snags, the developer haven't had contractors on site because of the lockdown measures, but however, as things eased, they've had people back on site as of May the 18th. So because of the process and because of how we've been able to approach this, we have passed all of the snags that we've noticed to date on everything that's completed back to them. And as of Monday, which was the 18th, when they had contractors back on site, they have been working through those snags and will continue to do so. The other thing that we also are in the middle of finalising is getting all of the safety and instruction documentation electronically rather than hard copies. So the developer is getting everything on a USB, and then we will be collecting the information that way. Obviously, this process will slightly evolve as the measures change, but going into our next completions, which are at the Centenary development in Leeds, we already have a process in place, and it has worked greatly during the worst times. So I'm confident that going into our Leeds completions, the service will be just as good for our clients.
Great, thanks, Nicola, for that one. A question has also come in today from Singapore relating to our rental protection insurance policy through our partners at Good Lord. This client has said that their tenants are still paying their rent in full and on time, but this does change as everything with this coronavirus is changing on a daily basis. How will I be able to make a claim for this insurance policy, and what will the process be? I think, Sam, this might be a question for you, as you work quite closely with Good Lord, in particular with this rental insurance policy product. Over to you.
Sure, yeah, absolutely. I'm a big fan of Good Lord, who are our referencing agent and also our platform for the signing and execution of tenancy agreements and renewals. This client, yeah, absolutely, they can make a claim in the event that there is an incident, as long as they're in the period of cover. Anyone who's not familiar with it, rent protection is available, and including legal expenses via the platform Good Lord. So when you come to electronically sign your tenancy agreement and execute the tenancy, there's an option to click through and take up the policy. The policy includes things like nil excess, so there's no excess when making a claim, covers up to like £100,000 in legal expenses, cover to ensure recovery of the property. They do all the work in terms of trying to obtain rent from the tenant in the meantime. It has some damage cover thrown in there, and even after you recover possession of the property, there's a 75% of rent cover to look after you during the void period. So really great product, and we've had a few instances linked to COVID where we've had clients that are undercover, and it's a really straightforward process. So we can, as long as we're aware that you've taken out the policy, we can make a claim via Good Lord on your behalf, and their turnaround is phenomenal. They're very quick to pick up on these things, and of course it's in their interest to do so. So yeah, absolutely, you remain covered. And look, I mean, no one expected this 6 months ago, and it's an unprecedented time, and these rent protections are there to deal with when the unexpected does happen.
Great, thanks, Sam. We've had also numerous questions come in about contractors attending properties to complete expiring, in particular completing expiring annual gas safety checks. Are contractors still completing these checks during the current UK lockdown? And will my current gas safety certificate be renewed if it's due for expiry, say in 2 months' time? And what will happen if it's unable to be renewed? And I think you're best placed to answer this question for us.
Thank you, Charlotte, and thank you to all our presenters today. The gas safety regulations are still very much in force, and that means it is still a legal requirement for landlords to have a gas safety certificate in place for their property, and this must be renewed on an annual basis. As a normal course of action, we ensure that inspections are booked in 2 months before the expiry of the current gas safety certificate. Now, with the change that the government has announced during this period, it does mean that gas safety certificates can be booked in earlier than normal, which is 10 months from the expiry of the last certificate. So what we are doing is to make sure that we are booking in appointments in advance to make sure that landlords are always covered, and we can be certain that the safety of the tenants is paramount. All our contractors are following guidelines when they visit our properties, which includes wearing a mask and keeping a safe distance from anybody in occupation. And all our tenants have been given guidelines to this effect as well. And I'm happy to say that tenants do understand that it's very important for gas devices to be serviced and a gas safety certificate in place, so that we do remain compliant on this basis. So I hope that answers the question. Great,
thanks, Anna. We have time for one more question, which is coming from Dubai. It was recently reported in the UK press by leading market experts that it may take up to 2 years for the housing market to recover. In your opinion, do you think it will take this long? Lee, I think you may be best placed to answer this, as you covered off some of it earlier on at the start of this webinar.
I wish you'd given me the gas question. I mean, essentially, if not from an economic point of view, but certainly from a personal point of view and working in the industry for 20 years, the UK housing market, as I said, is very, very stable and has always bounced back, even out of the worst scenarios. And I think it will bounce back pretty quickly. As I said, I think you'll get a bit of a downturn or downward pressure on rents slightly, but I also think there's potential change in terms of tenants where The Help to Buy market actually was very buoyant. I don't think they'll be rushing off now to sort of jump on that bandwagon for the next 12 to 18 months. So I think actually the first time buyer market might potentially slow. If you look at London, lots of rumour on, you know, slashing prices. You haven't seen a sudden drop in 20, 25% in property value in London. My view is it's simply on hold. It's stalled. And essentially, I still think London's a great investment if you're looking to buy. And if you hold it for 10 years, your capital growth has proven every cycle that it pays off. I do think there might be a change on new property in London. So just in relation to the recent events, I think over the next 12 to 18 months that you'll see development sort of focus on sort of office to residential. The reason being, I think, like us, we're all working in separate locations currently, and businesses have worked out that they don't necessarily need offices in prime locations in London and can reduce fixed cost. And I think that'll open opportunity for redevelopment. So I do think, and they'll be in fantastic locations. So I do think that will be something slightly different moving forward. I still think investment in regional cities will be strong. There's demand in Sheffield, Manchester, Birmingham, with good solid investments, with a solid yield, with a lot of demand linked to universities and so on. So I don't see that specifically slowing. It's just going to be how quickly we sort of turn the screw and move on a bit quicker than where we are. I think there'll be a lot of frustration. So I think if you were going to move, you'll actually, once you can, want to move, be that renting, buying or selling. I do think there'll be a bit of frustration in the country. So people want to get out and do something. And if you have the funds, I think, you know, the market will be good and it'll be worth investing in. So essentially, yes, it could be a bit slower. I think the last quarter, I think, will be good. I certainly think 2021 would be a good solid year. I don't see a 2-year downturn. I just think it's a hold scenario because people are waiting to see. But I'm actually quite positive about the outlook. And I think from a lettings point of view, I think we'll recover quicker. I think from a sales point of view, it'll take a little bit longer, but I think there's opportunity for investors. So that's my take on it from a ground level rather than an economic one.
Great, thanks, Lee. That final question will bring our Q&A session to an end today. Thank you all for taking the time and joining our webinar today, and we hope you found it helpful and beneficial. Sorry if we were unable to answer any of your questions, but please feel free to email them across to inquiries@ipglobal-ltd.com, and a member of our team will get back to you. A copy of this webinar has been recorded and will be shared with you all over the next coming days. And again, I just want to take this opportunity just to thank you all again for joining us, and I hope, or we all hope, you enjoy the rest of your day, afternoon and evening. Thank you.